Welcome, everybody, to Tokens of Wisdom. I'm your host, Dave Rothschild, and I'm pleased to be joined in the studio today by Darragh Murphy, Head of Funds at Marfire. Now, before we dive into the episode, please listen to the disclaimer at the end of the show. Nothing we say here is legal advice, investment advice, tax advice. Darragh and I are going to have a fun chat about Cayman directors and the responsibilities that they that they have, but everything we say here is for educational purposes only, and so listen to the disclaimer at the end. And with that, Darragh, welcome to the show.
Thanks, Dave. Pleasure to be on with you. Thanks for having me.
Yeah,
and
absolutely.
Yeah, excited for this.
Yeah, me too. I have to say, first off, that your title as Head of Funds is probably the coolest title of anybody I've had on the show. So can you tell me a little bit about Marfire and what the Head of Funds actually means?
Absolutely. So by way of background, I'm Darragh Murphy from Ireland originally, moved to Cayman in 2017. And joined a large governance firm in the Cayman Islands. Then as the years went on, got more and more into crypto, and more opportunities started coming through the door. So I wanted to focus on it, let's say, going forward. So joined Marfire in 2024 as the head of funds. As the head of funds, I manage the funds practice in Marfire. And what that really means is managing the independent directors that are serving on fund entities in or as part of Marfire. So what is Marfire? Marfire is a governance firm that has grown its brand through crypto. It was set up in 2021 by an ex-partner of a leading law firm in Cayman, Oliver Bell. And over the years, then it has grown, initially focused on foundation entities, because they're heavily linked or tightly linked with token issuances or new tokens trying to launch. And then as time moved on, as the brand grew, got more and more traction on the fund space. And I was brought on to head that up and to kind of lead further into that. So we can take appointments on the crypto side, but also on the traditional finance or asset class side as well. And as head of funds, I'm managing the funds practice at Marfire. We currently have 12 people, all based in Cayman. And we have directors that can take appointments on the foundation side and fund side. So yeah, it's an exciting role. I've been with the firm almost a year now and thoroughly enjoying it.
Well, happy almost anniversary. I'm so glad to be celebrating that with you here. So I think this episode is really well timed because I just spoke with Patrick Colgrave from Forbes Hair about some of the, Cayman legal aspects that go into launching a fund. And we touched a little bit on, the role of the director, but we didn't really dive into what directors actually do and how this engagement works. So can you explain to me a little bit the role of an independent director for a Cayman-based fund?
Yeah, no problem. It's a great question. Depending on the sophistication of the manager that we're dealing with, typically, it's often a question we get. It's like, hey, I've been told to talk to the independent directors. What do you guys actually do? And why do I need to pay for an independent director? So from my perspective, an independent director is essentially a governance safeguard. So we'll sit on the board of an entity, be it a foundation or a fund, and provide oversight around laws and regulations, around how the service providers are operating, and basically act in the interests of the company and ultimately the investors, or the best interest of those parties. And as part of that, we're trying to keep service providers in line. We're ensuring compliance and making sure that the fund is actually operating as it should and efficiently. I guess as well, it's probably a good point to mention here that we're not trying to replace the investment manager. We're not doing any of the investment decisions or deciding on the strategy of the fund or any of that. That's the investment manager's job. So our role is more about objectivity and accountability. Mm-hmm. But also then we take massive pride in the independence piece. So making sure that we don't have skin in the game so that no one can say, there's a biased decision being made by Darragh as the independent director of fund ABC. So yeah, I typically just explain it as a governance safeguard, and we're here to help the manager navigate the fund space in Cayman, and to be a friendly eyes and ears on the ground. And usually that's pretty well received.
Yeah. So it doesn't mean that, on the onshore fund side, most of my clients and probably most of the people listening to this show are managing U.S.-based funds. And then all of a sudden they have some interest from non-U.S. investors or tax-exempt U.S. investors, and there's demand for an offshore an offshore piece in their fund structure, and then they go and they start setting up in Cayman, and they all of a sudden there's this idea that they should have independent directors on the fund, and it's a bit of a foreign idea if you're used to just managing a Delaware limited partnership, right? It's generally got a general partner that is making all the decisions, that's controlled by the same people usually as the investment manager who's making the investment decisions. And so I've had clients say to me, well, if I engage an independent director, aren't I losing control of my fund? Are they losing control of their fund?
Thankfully not. So I guess the manager will still be able to completely control the fund in terms of managing the portfolio, the strategy, even things like, the liquidity profile of the fund, anything that can be outlined in the offering or prospectus. Or constitutional documents, sorry, I should say. Whereas the director is stepping in to, make sure the fund operates within its legal and regulatory framework, and make sure it stays compliant with local deadlines and laws and regulations. And even when it comes to, the audit process, the director will be heavily involved from an audit planning perspective. So joining calls with the independent auditor and then reviewing the financials and the supporting information as part of the sign-off of the financials. So I would say, as opposed to kind of trying to compete with the manager in any way, we're a partner or a partner in governance, and certainly not a competitor for control anyway. We're trying to do anything by the manager. And, we're priding ourselves as well on the independence piece. Marfire is unique in the market in that although it's the biggest or largest crypto governance firm in Cayman, we're not going to blur the lines by providing other services other than independent directorships. So we don't do like AML officers, effective CRS, or registered office or board support. We allow we're very happy to leave the law firms concentrate on that because that's their bread and butter.
Yep. What does independence have some specific meaning, or does it just mean someone that's not directly affiliated with the management company?
Yeah, so it's a good question. So the term independent director in Cayman isn't actually a defined term, nor is the idea of like a non-executive director. So everyone at the end of the day is considered a director, but we're considering ourselves independent because we are not invested in the fund or affiliated to the manager. So we can provide, an unbiased opinion or view on any of the fund or entity related matters that arise on a case by case basis. And I guess that's really important because after the fact, if an investor or a service provider was to say, based on this fact pattern, we think that Darragh acted in a biased or, let's say, unindependent manner, then that would obviously be quite damaging. And that's where directors can get in trouble. But thankfully, not the case. I don't invest in any of the funds that I act as an independent director. I guess as part of it, we'll probably touch on it later in the podcast, but conflicts of interest is a big thing as well. So we got to make sure that if there is any sort of thing that makes our decision making biased or compromised, we need to mitigate that by being transparent and like mentioning it as soon as possible, and absolutely documenting it as well.
Yeah. I mean, it's a good point you raise, and it's one of the questions I had pegged for later, but let's get to that now. How do you think through conflicts in a role like this? Is it as surface level as, okay, I'm not invested in this fund, I'm not a member of the management company, and that's that, or does it go deeper?
It's all of those. Then it also comes to, at board meeting time, I will even disclose the fact that I'm an employee of Marfire. So if there's any Marfire agreements in place, there is an element of conflict there. Similarly, I would be forthcoming in saying that, if I'm a director of fund ABC, that's not my own appointment or my only appointment, that I am actually appointed to other entities. Fund of funds is a prime example whereby you may find that the fund you're actually dealing with is investing in funds that you may be a director on currently, or you could have been a director on in the past. So you got to mitigate those immediately. Identify and document really initially. And the best place to do that is at a board meeting when you join your first board meeting to say, now that we've been through the investment manager's report, some things have came to mind. I'm an employee of Marfire and also sit on multiple other entities, that sort of thing. But I think it's really about being transparent and just proactive on it, not turning a blind eye to it, and making sure that the manager is comfortable then that, you're being truthful, honest, and transparent. Obviously, things we pride ourselves on. So it's great. And SEMA have also been helpful as the local regulator in Cayman in that October 2023, they brought in a rule, corporate governance and internal controls. And one of the items that is like a point of focus in that rule is conflicts of interest and the mitigation of conflicts of interest.
Interesting. Yeah, that sounds actually not that dissimilar from me, right? When I have a fund of funds client and they come to me and they say, "Oh, I'm looking at investing in fund XYZ," I immediately have to go and bring it to my team and run a conflicts check, and because maybe Cole Freeman and Mallon is representing fund XYZ or something related to fund XYZ, and so it sounds like a similar process.
And sorry, you're absolutely right. And I should have mentioned as well that our compliance team at the point of engaging with a new client will go through our usual conflicts checks as well to make sure that it's not insurmountable. If we have other relationships or any sort of a conflict in the background, just to make sure that we've considered it, discussed it, and we're happy that it's not of the size or sort that would actually preclude us from being independent.
Yeah. So
that's
sticking with the theme of independence is I understand that for most funds it is not a regulatory requirement to have an independent director. Is that correct?
That's correct.
So what drives funds to engage someone like you and to actively choose to have an independent director?
Yeah, it's a good question, and one that we get quite a bit. I guess from my standpoint, where I see a lot of the interest stemming from is investor demands. Due diligence on the investor side has become more and more prevalent, more and more frequent. Unfortunately, we all know that DDQ requests are getting longer.
Yeah, of course.
And they can be tricky to deal with at times. They take a lot of time and effort, but a lot of it is investor driven. So especially the more institutional the investor, they're looking for as many controls and safeguards as they can get. So they see the independent director piece then as being a very manageable, or let's say, for want of a better word, an immaterial cost to the fund. Mm-hmm. It's actually providing something really useful. So yeah, I would say it's mainly investor driven. I guess the SEMA rule that I actually previously mentioned has also been a help, because therein it mentions that you need to be able to evidence independent decision making. And it's very hard for an investment manager to, in my view, if they have internal people on the board of the entity that are not based in Cayman and are very much not independent to the fund itself, to actually constitute a board that is of like nature, size, and complexity that matches the fund, and then also is actually capable of making independent decisions. I think it's been a trend in the industry whereby probably 20, 30 years ago, it wasn't really, well, certainly 30 years ago, probably wasn't really a thing. And over time now it has almost became the kind of template, or the go-to. And I know
default.
The default, sorry, is the word I was looking for. And one of the largest law firms in Cayman actually just published a report. It was either last week or the week before. Therein, it was saying, based on their analysis, the same law firm doesn't actually provide independent directors to funds, but that they're seeing 85% of new fund launches now have independent directors. And that's certainly been a change. Particularly if we look at asset classes, typically your hedge funds or your open-ended vehicles had more of a need for independent directors. But now we're seeing that transition to the norm, even on the private equity side. And it's also, interestingly, even on the real institutional side of the manager and the private banks in particular, they're starting to use independent directors on private funds. And I think a lot of that came from the Private Funds Act back in 2020, but more so the rule on corporate governance that SEMA issued in 2023. But as an independent director, it's welcome news. So we're happy with that development. Yeah,
of course. So it sounds like there's not a rule or regulation that requires independent directors, but there is, maybe I misunderstood this, so correct me if I'm wrong, there is a rule that requires directors to make decisions independently, so to speak.
Yes.
And so that's a tougher bar to demonstrate that you're meeting if your directors are all internal, I would assume.
Exactly that. And as you correctly said, it doesn't say in law anywhere for the vast majority of the entities that you need to have an independent director, but it's certainly the best way to show that independent decision making. Then, just as we've chat about it, it's worth noting that entities like any VASP entity in Cayman actually has to, by law, under the VASP Act, have an independent director. So they have to have a minimum of 3 directors and also 1 independent. So that would be an outlier, whereas funds don't have that same requirement.
Yeah. Well, leads me to my next question, which is, for most of your fund engagements, is the entire board comprised of independent directors, or is there usually someone internal involved also? How does that work?
It's usually a combination of internal and external. You would typically have the manager wanting to remain part of the decision making. So they will at least have one person on the board. What we're seeing more and more is the majority of the board being independent. And the reason behind that really is to show that the entity is being directed and managed from the Cayman Islands, and that you have the majority of independence, so that there's no, let's say, stalemate. If you had a board of two directors, one internal, one independent, if they weren't agreeing with each other, you could end up with a stalemate and then needing to get like a third party to come in and resolve the stalemate if the issue was big enough. But yeah, they've certainly seen the majority now would be independent. And there's no rule against having a totally independent board as well. So that's also becoming more common. And I guess the question we sometimes get is, are we happy to serve on boards with other service providers? So the idea of what's colloquially known as like a split board or a competitive board, we're more than happy to share board seats, not share board seats, but share boards with other providers.
Yeah. So it would be like another fiduciary services company holds one director seat, you hold another one, and maybe someone internal holds the third.
Yeah, exactly. And then, naturally your quorum requirements are dependent on the size or the number of people on the board. You can go with typically majority of the directors being present at a board meeting allows it to be quorum, but that is flexible as well.
Now, do you see requests from funds to have you serve as in some capacity like this for onshore vehicles, or is it exclusively Cayman entities that you serve as director to?
Yeah, interestingly, so sorry to answer the question, it's not solely Cayman entities. We do Cayman, BVI, and US entities, as well as actually European entities, but I guess our particular focus is on Cayman and BVI and the US. Where we see the requirement to sit on onshore vehicles, it usually comes down to structure. So if there's LP entities or LP GP structures, we may provide like an advisory board or a governance committee to the LP entity in the US. And typically that will run very similar to a board of directors, but we will put the duties of the governance committee or the advisory board into the LPA. And, I guess it's versatile in that you can put in very niche requirements, or you can make them quite broad, or you can pretty much mirror it to a regular board seat. But they're actually increasing as well. And there's particular structure types where, in order to satisfy the SEMA rule, whereby they have a structure that, let's say, a structure in the US that will actually need the governance there to kind of say this is the decision maker within the overall structure, and that we want to show that we have independence there so that the Cayman piece of the structure is also happy and seen to be compliant.
Yeah. It's interesting because it's something I have seen occasionally, but not very often. And it always surprises me, especially when there's a mini master fund structure where your Delaware fund is the master fund and it's actually doing all the trading, and investors are very concerned with the composition of the board of the offshore feeder, but then they don't care at all that the master fund that's actually conducting all the activity that, in theory matters doesn't have any independence. And so it's always been interesting to me. And I'm curious if some trend will emerge where investors start looking for some independence on the onshore side too.
Yeah, for sure. And even take the example of, a US based GP with just a standalone LP in Cayman. If that LP is registered in Cayman, you need to satisfy the requirements of the SEMA rule, and obviously local laws and regulations as well. But a way of doing that would be to put a governance committee in place on that LP structure or an advisory board. And we feel that's an appropriate way to provide that governance and independent decision making.
That makes sense. So, we've touched on this a little bit, but are there other aspects of Cayman regulations that really kind of shape or form your responsibilities as a director beyond what we've already discussed?
Yeah, so I guess we're constantly keeping the laws and regulations in Cayman at the forefront of our mind. I was fortunate in terms of when I moved to Cayman, because I moved to Cayman in 2017. And since then, we've seen a lot of, let's say, either amendments or new regulations in Cayman. The likes of the AML laws and regulations came into unregulated entities and then regulated entities in 2018. Since then, we've had various differences in beneficial ownership, economic substance laws have been brought in. Now we have the VASP Act, and there's some items under consultation as well with CIMA at the moment around tokenization. So definitely, the local laws and regs, we need to make sure that the fund is staying compliant with that. So the independent director, in tandem with the service providers, be it the fund administrator or the manager or the auditor, we're constantly thinking about deadlines and compliance and making sure that the entity name doesn't show up on any list for non-compliance, because unfortunately what that'll mean is fines and penalties from CIMA, and nobody wants that. And it's my fiduciary duty to ensure that doesn't happen, or at least try my hardest to make sure that the service provider is doing as they should.
Yeah.
But yeah.
So
definitely.
So you're keeping I mean, I'm totally with you, even since I've been doing this for 12 years, 13 years, and I've seen a whole host of changes come up at the Cayman level. And so I guess it's on you to kind of stay on top of everything that's happening. And when there's a new law that's going to affect how the fund needs to operate, you probably have to raise your hand and tell your funds like, hey guys, we got to do this.
Exactly. And, we have an internal regulatory group that monitor that in particular, and then they'll disseminate it to the director group within the fund practice. And then after that, we often provide communication that we send to clients just to say, this has happened, here's our view on it. And after that, then, they're always welcome to engage with fund counsel to see the exact impact or the formal legal advice or memo that will support the impact it will or won't have on the fund. So that's the good thing about the model with independent directors and funds in particular, is it's a delegation model whereby each service provider plays a key role in the overall puzzle of making sure that the fund stays compliant. But a lot of the oversight and responsibility obviously lies ultimately with the director. Unfortunately, one of the downsides to being an independent director is if a situation sours, it's the director that people will pursue and they'll be pursuing me personally. So I do not want that to happen. So, there's a vested interest from me personally as well to make sure the entities are compliant.
Yeah, when the what hits the fan, it's hitting you first, it sounds like.
Exactly. I was trying to avoid using that word, so we're certainly on the same page.
Totally. One area in which I've seen a lot of changes, or at least I perceive them as changes in the Cayman regulatory landscape, is in the AML area. Now you have to have all these AML officers, money laundering officers. Are directors involved at all in the AML, KYC compliance stuff?
So typically from a director's standpoint, we will leave the AML, KYC to the administrator in terms of the capital activity or accepting new investors subscribing to the fund. And similarly, if there's transfers or redemptions, AML or KYC is always top of mind. Separate to that, then, I guess from a compliance perspective, you're correct in that there will be 3 AML officers appointed to the fund, provided it's domiciled in Cayman. So you'll have your AML compliance officer, your money laundering officer, and your deputy money laundering officer. So they will take ownership of those duties from a day-to-day compliance perspective, which is the AML CO, to then anything sanctions or reporting related will fall with the money laundering reporting officer. And the deputy is just more of a continuation appointment, or such that if the MLRO decided to resign or move jobs, that we don't have a period where there actually isn't a reporting officer. So they're really key, and they would have came in as part of those rules that came in 2018. I guess an important point to make here as well is that CIMA have been pretty clear that the director really probably shouldn't be the same as any of those AML officers, because they are separate roles, and they can be a point of escalation. So that kind of undermines it then, whereby the director would almost be escalating it to themselves. So that doesn't make sense. The people on the AML side as well, or the officers, sorry, they're typically qualified deeply on the compliance side and on AML. So like one of the certifications they do is ACAMS typically, and that well prepares them to sit as those appointed roles. But the director will work in tandem with them and rely on them as the specialists, similar to the fund administrator has obligations, in terms of accepting new investors and dealing with subs-regs and transfers. But then thereafter, the director can be used as a point of escalation in terms of, if there's a bit of uncertainty, dependent on the exact facts of a situation, they may say, look, we would like the director to lean in here to get their opinion or view on it. So yeah, it's an interesting space, but obviously with the geopolitical landscape of the last couple of years, sanctions and anything related has really came to the fore, and we all have to get up to speed with that pretty quickly.
Yeah.
So yeah, that brought its challenges. You know the way these things work. Different anything that's kind of left to interpretation, people will have different views. It leads to discussions and meetings and that sort of stuff. But no, it's something we take very seriously, and it's the same when we're doing our KYC checks at the start. We need to find out exactly who we're dealing with and making sure that they are not sanctioned individuals or not related to sanctioned investments or entities. So it's all nicely linked together.
Yeah. I certainly understand the concept that an independent director whose role is oversight should not be the same people or firm whose role is being overseen, right? So it would be strange if you were the AML officer and also charged with overseeing yourself in that role. So I get that.
Exactly.
So, sticking with our theme of the what hitting the fan, sometimes bad things happen and funds get in distress. Can you talk me through what's your role when a fund is in distress?
Yeah, so I guess from a distress situation perspective, the director can have kind of many different roles in it. But what we'll basically pride ourselves on doing is we'll work with the managers, the lawyers, and the administrators, or if it's gotten to the stage that there's like an insolvency practitioner or a liquidator dealing with it, we just want to try and stabilize the situation first and foremost. And that can take different forms. That could mean, it's pretty clear that we need to restructure, or perhaps maybe the manager needs to be removed and replaced with an insolvency firm and they'll take over the management of it. Then sometimes it'll just be kind of life cycle stuff whereby the fund is coming to the end of its life cycle. Hopefully it has performed as it should and it has to enter the solvent wind down or liquidation period process rather. And I guess the last element that we would kind of help with is dealing with the communication with investors. If there's notices going out to investors, we'll review those and make sure that what's being communicated is accurate and certainly aligns with maybe what we have discussed with the manager. And then we'll formally be involved in terms of actually dealing with the liquidation. And so we'll be passing resolutions that are suggesting the wind down of the entity, and then that'll ultimately get approved and the appointed liquidator can deal with it. But I think really it's about being available and trying to manage the situation so that it's in the best interests of the investors. But they can be tricky because they take many different shapes and forms. And unfortunately, when that word hits the fan, sometimes communicating with the manager can be difficult. So,
Sure.
that presents its challenges.
Yeah, because the manager often in those situations is in distress themselves, so it can be tough.
Exactly. The way these things work is that they're receiving more and more bills through the letterbox as time goes on, and if it's not performing, it it's no longer a going concern, and that brings it can be tricky to deal with, but as an independent director, we have to be well versed in how the process works and be available to take calls at short notice and also be proactive in terms of, suggesting the right course of action. And often that means, referring in liquidators or insolvency practitioners and making sure that they're the right fit for the situation and that ultimately we're acting in the best interest of the company, which has a knock-on effect then to being in the best interest of the investor.
Yeah, makes sense. And I could imagine situations, we don't have to get into this. It's probably a whole other episode that we could talk about all these different situations. But, I can imagine situations where the interests of investors are or opposed to the interests of the manager. And then you're sitting there as the independent director and it might get thorny.
Yeah, exactly that. And sometimes, it's a case of if there's poor transparency, the directors won't be aware until much later in the day than they should be. And unfortunately, that can come out by way of negative news or negative media. And your hands are a little bit tied in that sense because, we can't help but what we don't know about. So we do stress the point that, transparency is key between the manager and 99% of the time, it's not an issue at all. But naturally, there will be those outliers that we have to be prepared for. We have unique ways of dealing with that. And our DSAs as well from a protection point. So in terms of the engagement of an independent director, it's typically a tripartite agreement between the engaging entity, so say the fund or the foundation, then the entity that the director works for, so in this case Marfire, and then myself. We'll have protections in there where we can seek external counsel to act as an advisor for the director. And that's needed at times if there is a mismatch between the manager and the board of directors. So it's a key safeguard to have in there, but very much also industry standard, thankfully, at this stage.
I mean, that sort of leads me to my next question, which is more kind of nuts and bolts of how you get engaged. Is if I'm starting a Cayman fund and I need an independent director, I want an independent director, am I engaging Marfire? Am I engaging you personally? It sounds like it's both.
Yeah, correct. It's actually both. So I guess the way the process works is we would typically have a pitch call and chat through the nuts and bolts with the manager. And then based on discussion, they may say, okay, we're happy to engage, or they may have additional questions. But then the next stage is we'll pass it to the compliance team. They'll do their KYC and onboarding checks. But in terms of the actual engagement itself, it's via a director services agreement, outlines the roles and responsibilities of the director and what we're expecting from the manager as well. And you're correct, it is both Marfire and myself, because it's that tripartite agreement where it'll be between the fund entity, Marfire, and myself. And it wraps it all together nicely. Because at the end of the day, although the liability is personal in that they will pursue the director, we have director and officer insurance provided by Marfire and also provided separately by the fund. So it's all intermingled, let's say, or fits together well. And it's nice that, it's simplified by way of, a single agreement between the three parties. And generally we find it works well. And a lot of the terms and conditions now in director services agreement, both in Marfire and kind of across the board, it has become very standardized, let's say. So typically investment managers know exactly what they're looking at. And we're well accustomed, obviously, with the queries or questions we typically get. Yeah, that's typically how we engage.
Does that agreement then talk through what would happen if you left Marfire, for example, and you were serving on the board of a fund? Like, does the seat go with you? Does it stay with Marfire? Does the fund get to choose?
Ultimately, I guess the fund actually gets to choose. So the relationship is a personal one, but as part of being an employee of Marfire, there's covenants and terms and conditions in place whereby if I decided to leave, my directorships would very much stay with Marfire and I would be free to move on. But as part of the director services agreement, then there is clauses in there that just, identify to the manager that if that is the case, that there needs to be a change, that, we'll provide suitable replacements and make it as smooth a transition as possible and make it as little of a nuisance to the manager really as possible in order to create the continuation of the relationship. And one thing we typically, maybe not directly related to this question, but we get asked about is, from a fees perspective, how does that work?
Yeah.
And typically what we do is we charge annually. So we don't charge by the hour. That's a question we get quite a bit. I guess, it differs depending on the industry and certainly more akin to your industry and on the law side that, billing by hour is a thing. Whereas we have an annual fee and we typically don't charge for pre-launch work as well. So any of the time spent on the run up to the launch of an entity, we build that into how we are committing to grow with the manager and build a relationship. And that's where we can really, handhold the greener managers and be of use to kind of walk them through any of the technical jargon they're dealing with, or just be a friendly touch point to say, hey, we've received this agreement or this email. Can you break it down for us? Or should we be considering other things? Is this overkill or is this market standard? That sort of thing. But it's usually welcomed by clients because ultimately they're paying less, but they see it as a commitment from our side to, we're not trying to, overcharge or to kill them with fees from the outset. And naturally they will be engaged with the likes of yourselves or offshore counsel at that stage as well. So it's important to leave the specialists do their job as well.
Yeah, hopefully both. But I think it's certainly always helpful to have an advisory ear, somebody you trust who you can call and say, man, another MLRO officer? Like, really? Is this necessary? And you can say, yeah, this is necessary. We got to do this.
Yeah.
So I get that. And that makes sense on on the fees? That was one of my subsequent questions. So even better that I didn't have to ask it.
Sorry,
I guess.
I got there before you.
No, that's great. I love it. Couple last questions for you. In terms of types of funds that you work with, I understand you do foundations and funds. Are there specific asset classes, strategies, fund types that are a particularly good fit or a bad fit for you? I mean, it sounds like crypto is right up your alley, but
Yeah,
how do you
so
answer that?
I guess in terms of the brand, Marfire has really built its brand on providing crypto directorships or directorships for crypto entities. My background is more on the TradFi side, really, because back in 2017, it was practically all TradFi
Hmm.
funds, so private funds, private equity, sorry is the word I'm looking for, private equity, real estate, and venture funds. Naturally, you'll have a ton of hedge funds in there as well. So long short equities or variations of that trading equities. So we're well equipped to do both. So we can do any of the TradFi stuff. And naturally, we have a huge wealth of knowledge on the crypto side, which differentiates us from a lot of service providers. So we're very happy to take the crypto entities as well. So I guess there's more of there's a multitude of kind of different strategies on the crypto side, from like direct trading to quant strategies to staking or yield strategies, and they're all
Right.
very much crypto orientated and come with or present their own intricacies for each of them. No, we're well equipped to be appointed to any of these asset classes. And I think within the director group, we have a varied background and experience. So we have lawyers in the team, accountants, tax qualified people, people with regulatory backgrounds, both locally in Cayman and also in the UK. The UK in terms of the regulator, the FCA. So we can provide based on a bio basis, exactly what the fund manager is looking for. And I think although the majority of the book is crypto orientated in some shape or form, particularly with my background and experience, very happy to take TradFi appointments as well. And we're seeing a lot of traction on that, which was directly within my remit when I joined Marfire. So happy to
Great.
report on that as well.
That's awesome. Okay, last couple questions. I'm starting a fund. It's my first Cayman fund. Never engaged an independent director before. How should I choose the right one?
Yeah. It can take a couple of different points of view on this. I would say I would encourage managers to have a call with independent directors, or typically Kim-based law firm or an onshore law firm will see the formation of the entity and see the conversation earlier than the directors. They will typically have their views and opinions on who would be best placed to sit on the board. Then I think really it comes back to experience and also the personal connection between the manager and the director. If there's a personality clash, it's not going to work.
Yep.
You'd be looking for as well across the board of directors that there's a complementary composition. There's probably no point in having the same type of person, let's say twice or three times on the board, because you're
By that
probably
you mean like having 3 lawyers on the board, for instance, or 3
exactly.
accountants.
Yeah,
Yeah.
yeah. So you could vary it in that sense as well. I would encourage managers to scrutinize capacity when it comes to directors. So making sure that the director actually has the adequate amount of time and resources and support to actually have time for the manager. But yeah, I think experience is key. So if you're looking for certain backgrounds or experiences, that they complement each other from a board perspective, and that each individual director has adequate and correct amount of that experience, then there's a personal connection. And I would say that the capacity point is key as well, because you want to be able to get in touch with your director at short notice, because scenarios will arise or can arise where you're going to
Sure.
need them quicker than you expect. And that's when we can really show value add, that we can jump on calls at short notice, be a real help to the manager and guiding them through whatever issue it is.
Yeah, that makes sense.
Obviously, explaining exploring any conflicts of interest they may have, because you want to
Yeah.
mitigate those as well. So
Yeah.
that's good.
So experience, complementary experience, capacity, and kind of personal rapport, personal connection. I think that all makes that all makes perfect sense. So my last question is kind of along similar lines, but if I'm starting this fund, my first Cayman fund, what's the smartest thing I can do as I'm lining up the launch process?
So I would say be very diligent. So like do as much due diligence on service providers as you can, as much of a pain as it can be in terms of DDQ requests and all that sort of stuff. It is very useful to, do your homework, make sure you're engaging with the right service providers. Don't be afraid to ask questions. Definitely ask as many questions as possible. And use the service providers to guide you. They're the specialists, be it the independent directors, the law firm, the auditors, the administrators. They're the ones that do this day in, day out, particularly for emerging managers. They need to, I would say, probably over-plan, over-scrutinize their strategy and the way they want the fund to look and run from a structuring perspective all the way down to strategy and liquidity gates, all that good stuff. But yeah, I would stress the due diligence from the manager side. If it's going to be a Cayman vehicle, absolutely use onshore counsel for the right referrals from a Cayman counsel perspective, so that you're talking to the right firms and you're going to get the best advice. Probably also encourage them to come and visit Cayman, because I think people have different views of Cayman or varying views until they actually visit Cayman, and they're pleasantly surprised at the sophistication of how Cayman works, how the government interacts with the industry, and how safe it is here, how there isn't anti-money or how there isn't money laundering going on a day-to-day basis. So yeah, that I would say just be proactive on the due diligence side, do their homework, and engage with suitable service providers.
Plus, they got nice beaches, right?
Yeah, they're probably one of the best. 7 Mile Beach, which interestingly is actually only 5.5 miles of white sand beach.
I've heard this from other people. It's inaccurately named, as they say.
Yeah. But no, it's spectacular. And personally, I have no want to leave Cayman anytime soon. I really enjoy it here, and it's a great place to live and work. So it's all good.
Awesome. Well, I will take that advice myself sometime soon and come visit.
You definitely should.
But Darragh, I really appreciate you taking the time to explain all this to us. It's been great having you here.
Thanks, Dave. Pleasure to be a guest on the podcast.
All right. We'll talk soon.
Take care. All the best.
Okay, with that scintillating conversation out of the way, we can get to the part you've all been waiting for. The legal disclaimer. On this show, my guests and I discuss laws, regulations, and aspects of fund management from a 10,000-foot view. And nothing I say here, nothing my guests say here is legal, investment, or tax advice. Everything we say is our own personal opinion. Nobody is speaking on behalf of their employers on this show, and it is entirely for educational purposes only. If you're thinking about starting a fund or you're curious about what's involved, this show is a good resource as you explore your options. But if you're going to pull the trigger and actually launch a fund, please engage professional service providers to assist you in the process.